Hello and welcome. In this video we will go through with the notes. So I assume you have downloaded the lecture notes from your website, and so we will go together with the lecture notes. Please make sure you download if you haven't downloaded yet, and please come to page number 1 of your lecture notes. I will do so as well with you, and so that we can read out our notes. I'll just share the screen with you so that you can look at your video as well. Here you go. As you can see on your screen, these are our lecture notes for F6 taxation. So here you go, on page number 1 of your lecture notes, that is chapter number 1. And as I told you in our first lecture that our tax year for Finance Act 2016 will start from 6th of April 2016 and it will end on 5th of April 2017. That is Finance Act 2016, and you can use these lectures up to exams in March 2018. Alright, so that is our income tax pro forma. Whenever whoever is earning income, they will have to make the income tax pro forma and they will have to pay tax according to this pro forma. So income is divided into 3 sections, as I told you in our first video, and we'll have to list down all of the sources of income. Then we'll have to deduct the deductible interest and personal allowance, and that is known as taxable income, and we'll have to pay tax according to these tables. After that, what we deduct is tax deducted as source. And on the next page number 2, if you come, that is income on a jointly held property. Say for example, if you hold a property, you and your wife hold a property, income between them, these property will be shared 50-50, whatever your holding percentage is. Say for example, if I hold 80% and my wife hold 20%, now regardless of actual percentage, income will be shared 50-50 as far as tax is concerned. So I will have to pay tax on 50% and my wife will have to pay tax on 50%, unless I and my wife, we both have to ask HMRC that please make sure you distribute the income according to actual percentage. So then HMRC will use the actual percentage. If the question is silent, please make sure you use 50-50. Then comes the interest income. We have already seen interest and dividend income in the previous lectures. Next is exempt income. Now these are the following incomes are exempt income. So these are the sources of income. If you're earning from these sources, you will not have to pay any tax on these sources of income. Alright, one of which is individual savings account, but is only up to £15,000, 240. And child benefit is also exempt unless you are earning more than £50,000. In that case as well, it will be exempt, but you will have to pay what is known as child benefit charge, which you have seen in the previous video. Then comes the deductible interest. I told you what the deductible interest is. Interest is always paid on the loan. So if I take a loan and I will have to pay the interest on that. All right. Now, if I take a loan and if I use that loan for some of the specific reasons, whatever interest I pay on that loan will be deducted from my income. All right. So that is known as deductible interest. All right. So what are them purposes? Now, if I take the loan and I invest in partnership, interest paid on that loan will be deductible. Likewise, if I buy plant and machinery for employment and investment in employee control company and investment in cooperatives. So if whatever I use the loan for, if I use the loan for one of these reasons, then interest paid on that will be deductible interest. All right. Now it says note 3. If you go back to page number 1, and I will go back to page number 1. Here you go. It says deductible less deductible interest, note 3. So I have given the notes as well. So that's why I've mentioned notes 3 here. If you come to page number 3, please, that is personal allowance. We've already seen here, we have already done that in the previous video, and we have done child benefit income tax charge as well. Just before child benefit income tax charge, there is something known as marriage allowance. I might have mentioned you in one of the previous videos. Marriage allowance is that I can transfer some of my personal allowance to my wife. A maximum I can transfer, and it is a standard rate, which is 10% of my personal allowance. So normal personal allowance is £11,000. I can transfer 10% of that, which is 1100. Now what this personal allowance will do is it will not be added into my wife's normal personal allowance. What it will do is it will give her tax benefit at the basic rate, and it will come in the income tax reducers, if you remember. So in the income tax reducers, the income tax liability will be reduced by £220. Child benefit charge, we've already seen that anyway, and on page number 4 it says gift aid donations. So we have done that as well. I told you it is same treatment, just the way we do personal pension contribution, we have to deal with gift aid donations in the same way. And note number 7 is personal pension contribution, so it is the same treatment as gift aid donations. We have already seen that. And that is end of our chapter actually. So that is it, and that is end of our chapter. Now if you just look at personal pension contribution on on your screen, it tells you that step number 1 and then step number 1 again. So let's look at step number 1 first. Step number 1 actually. So the amount paid by the taxpayer will be grossed up by 100 multiplied by 80. Then it says the basic rate band and the higher rate band will be extended by the gross amount. Now the second step number 1 is not step number 1, it is obviously step number 2. Now in the example, as I said, if you want £10,000 in your pension, you only have to pay £8,000, and the remaining £2,000 will be paid by HMRC. What you get in your pension is £10,000, which is gross amount. Now what this 10,000 is doing, it will be added in your normal personal allowance. It will be added in your basic rate band. All right, so this 10,000 will be added in your basic rate band. So on left side, it tells you normal tax bands. So which is basic rate band is from £5,001 to £32,000. Whereas if you check on the right side, it is extended by £10,000. So the extended one is up to £42,000. Likewise, higher rate band will also be extended up to £160,000. All right. So that is our personal pension contribution. All right. So that is it, and that is end of our chapter number 1. So that it was income tax. Please make sure you buy BPP exam kit and do lots of questions, because especially MCQs questions, they are very, very important, because whenever MCQs come, examiner has more to examine. The examiner can examine you small minor topics as well. Like any of these topics can be examined in MCQs questions, whereas in the previous structure of the exams, where there was no MCQs, it was difficult for examiner to examine each and everything. Now it's very easy for examiner to examine each and every even small topics as well, because he can easily examine small topics, alright, because he has got MCQs. That's it for now, and I will see you in the next lecture with chapter number 2. Alright, thank you, and see you in the next video.